A very good morning to one and all attending this masterclass today. On behalf of the Entrepreneurship Development Cell of St. Xavier's College, Kolkata, I would like to thank each one of you for being a part of today's session. And we hope that all of you will learn something and benefit from this session. I would like to extend a warm welcome to a highly passionate individual with a rich and profound experience in the field of digital payments and deep strategic insights. It is my absolute honor to present to you Mr. Nalin Bansal, the current Chief of FinTech and Cooperates for the National Payments Corporation of India, who has had an affluent history of working in this sector and bringing forth revolutionary strategies for the betterment of. We are extremely thrilled and honored to have you join us, sir. At the same time, we are grateful to you for taking out time for a session with us from your busy schedule. On behalf of everyone at EDC, I wish all the attendees of the session a riveting experience as they hear Mr. Bansal share his intriguing insights on startups' growth and their future in innovation. Over to you, sir.
Thank you, Divyam. Um, I am, extremely excited uh, that I was able to take out this time and spend time with all of you. I'm looking forward to questions at later half of this session. Um, I think digital payments is not a new topic. It is well represented. It is, widely spoken about in terms of what we've been able to achieve in the last 5 to 6 years. Before I get started, I have a small presentation. I'll quickly go through it, but for the benefit of the crowd here, I would like to just introduce NPCI. NPCI, which is National Payments Corporation of India, is an umbrella body. It was set up by RBI about 12 years ago, with the single objective of ensuring that our country is able to set up its own infra as far as digital payments is concerned. Over the years, I think we've done a lot of work. A lot of payments that you do today are happening on one platform or the other that we have set up. We are not a B2C organization, so obviously you don't see our brand in the market as much as you see other brands in the market. But I can safely say behind for 80 to 85% of transaction, behind every transaction, there is NPCI system involved. To just give some examples, today when you take out cash from an ATM, any ATM that is NPCI system at the backend switching, ensuring transactions happen on time. Or you do IMPS to do account-to-account transfers, RuPay, debit, credit, prepaid cards to make payments using your cards. And not many people know we roughly have about 700 million credit card debit cards in the market put together. And of course, FASTag. You must have seen FASTags, in your cars, vehicles, wherever you use. That's the system we have set up for tolling and digital payments on tolling. And of course, last and not the least is UPI, the GPay and the phone pays of the world, Paytms of the world, and any other apps that you use. All use UPI as a technology to be able to give you that experience that you have today. So just wanted to give you a brief background. We were set up with about 10 to 11 promoter banks. And today we are about 63 entities who have invested in us. Mix of banks and financial institutions. We are zero debt. We are cash positive, but we are still non-for-profit, which means that we don't give dividends out to our shareholders. When very recently we've also set up a separate SBU called NIPL, NPCI International, because there has been a lot of demand for our technology and our standards in multiple countries across the world. So hopefully UPI, RuPay will become known products, not just in India, but even internationally. So that was a brief background I wanted to give to all of you. And just to make it very clear, we are not a government organization. We are not even a PSU. But we work very closely with all these sectors. like I said, I have a small presentation. I will try and see if this is working out for you. Are you all able to see? Maybe Divin, if you can confirm.
Yes, so we can see it.
Oh, perfect. Okay. Um, yeah, I think just some numbers, and the reason of why I'm getting into these numbers is because since most of you are still studying or getting into your first jobs, this will help you get a sense of what are we in terms of digital payments if you compare with other countries in the world. Um, this is just 2020 and versus 21, but if I was to compare 2010 to 21, it will be a very huge difference. I think important point to look at this is that we as a country have now surpassed every other country in the world in terms of how much real-time payments we do. UPI alone as a platform does 8 billion transactions, actually now going up to 9 billion transactions a month, which is a huge number for us. That's almost like 300 million a day. You can imagine all these transactions getting switched, managed, and processed by us in our own data centers, in our own servers, and using our own source code. So there is zero cloud, there is zero third-party application, there is zero license fee. We pay zero license fee to any vendor in the market. So I think that's an achievement, for all of us to look at, not the number alone, but the fact that we are able to do so much of volume at scale through our own engineers on ground. I think important to get back into a little bit of history. I think this is not that we invented. A lot of things have helped us through this journey. Some of you would have heard about the JAM Trinity, what is known as Jandan, Aadhaar, and Mobile. Mobile was the first decade of 2000, which was 2001 to 2010. Then came Aadhaar, which was, I would say, 2011, 12 to about 14, 15. And then came Jandan accounts. I think mobile gave people access to get connected. Aadhaar gave them identity. And then eventually, the Jandan movement allowed people to have financially enabled accounts, or what we call as bank accounts. And with the combination of all three, as a consumer, you were able to have a mobile number through which you can reach out to your bank. You had a bank account number, and you had an identity using which you can, get identified in the ecosystem. And this eventually led for us to build on the payment systems that we could, using a combination of all three. I had spoken about this. We are essentially an umbrella body. We work, like I said, primarily with Reserve Bank of India. He's a primary regulator who helps us on compliance, fraud, regulation, KYC, and many other things. And most importantly, the inspiration that they give to us. And for you, all of you, it's important, if you have not gone through it, RBI releases a vision document every 5 years on payments and settlement systems. And for the purpose of getting a context, all of you should have a look at that. And the current document is 2022 and 25. It's 3 years now to get a sense of what has happened and what is going to come forward. Of course, we work with a lot of government bodies, Department of Financial Services, MAUA, MeitY, MHA, Ministry of Railways, Ministry of Road Transport. So these are all entities that we work with. And in the market, we work with a lot of entities, primarily banks, who are our distributor of products, fintechs, merchants, and essentially the consumers. So, like I was saying, on the PMGD accounts, when they started growing up, starting 2014-15, this essentially enabled people to have a bank account, which they never had. I think some number puts that at about 450, 500 million Jan-Dhan accounts in the market. Practically out of 1.3 billion population that we have today, roughly 900 to even a billion bank accounts are currently operating in the ecosystem. This essentially allowed us to be able to say that now I can set up a bridge between two accounts because people have bank accounts. And now whether they're active or not, that's a separate question. But even if they don't have bank accounts, they have wallets, they have prepaid accounts, so on and so forth. So there is today today every person in this world, or at least in this country, has an account link behind them. And that really gave us the power to say that now we can digitally talk between two different accounts. Um, um, once the accounts are open, of course, the question came as to how are these accounts getting utilized. And I think that's where the direct benefit transfer started playing a role. The government's strategy to start giving subsidies directly into bank accounts started coming in. So with people now getting these accounts, they using their Aadhaar, they were able to pass on subsidies to these accounts over a period of time. And you can look at this graph. The blue graph, it talks about the cash scheme, how the cash scheme has come down, or giving benefits in cash has come down over the years, and how the growth has happened in the funds. So if you look at the yellow bar chart, how growths have happened in the funds. Now, essentially, what this did, that cash is expendable. It doesn't go back into the account. You give somebody cash, he doesn't really deposit in the account, and he uses it wherever he wants to. But if you give these benefits directly in those bank accounts, they tend to keep that money in those accounts. And they will keep that money in those accounts as long as you give them an opportunity or an option to use a certain payment mode to pay using those accounts. So if you have a RuPay card, you can go to a merchant and pay, or you can go and withdraw cash from an ATM. Or if you're enabled on UPI, you can just use your mobile phone and pay to a merchant or do a P2P transfer. So it was important that both these things come hand in hand, both the deposit of cash and subsidies in their account and giving them the ability to start transacting. The union of these two functionalities is what was really that has taken digital payments to this level of growth. We're starting 2014-15 right up till 2020. Both the public sector banks, the government, the regulator, us, the fintech market, and the entire financial services market worked hand in hand to make sure that when monies are deposited in these accounts, they just don't take them away as cash, or they don't withdraw an entire amount of it, but they keep it so that they can use these digital payment modes to make their payments. And which is why a lot of people talk about volumes of transaction as to they may not be realistic or relevant, but this is the real engine that drives our digital payments today. In terms of every Indian having access to an account, having money in that account, and having a mechanism to use that money using a digital payment method. These are just some numbers of value and volume. If you look at retail digital payments, see from 2019, they've gone up from about 20% to about 30%. And if you look at RTGS and paper-based instrument, they have remained stagnant. Now, and this is an important point. While people say that a lot is happening, we're already twice the number of digital payments if you compare to the next country. Possibly we have achieved the last point of our market penetration, but that's not the case. If you look at this graph, it'll tell you that's not the case. And the reason why I'm presenting this chart to you, a lot of you are entrepreneurs, I'm sure, out there, young folks who are looking to evaluate digital payments as a career. We are just about 30% there. If you look at the overall payments in the market, 70% of that still happens through some mode of payment, whether it is RTGS or cash or some other form of payments. In fact, if you just look at a number of currency in circulation, still very high. Now, it could be for various factors. Still, people buy really large value assets like property using cash. Part of it is cash, part of it is home loan or some amount of digital payment. But the point being, that is still a long way to go for us to cover that market. Well, all said and done, that 30% itself has given us such a high amount of growth. We have started from seeing just about 1 million transactions daily or 2 million transactions daily to what about 300 million transactions now daily. We used to work with a very small set of banks in 2010, gone up to about now 1,000 odd banks, and of course all these products, UPI, IMPS, which have helped the growth. I was also making a point about total number of digital payments that are day to day. You can look at this at in 2021, 43.7 billion transactions have happened through the year, out of which 37 billion are on NPCI platforms. So that's almost about 80% of it that we switch and process. And just to let you know, if you're inquisitive, the balance 6.2 could be things like maybe RTGS or international card schemes like Visa and Master. So they do some transactions. Some numbers on UPI. I think this is well known. This has been the poster buy of what we have done in the market, and UPI alone, like I said, 260 million plus. Also, very important thing about what UPI and these banking of consumers did was that merchants started accepting digital payments. I'm sure all of you would have seen merchants having QR codes, and those QR codes are linked to their bank accounts. So they started realizing that having accounts and having a acceptance form factor linked to their accounts is much better than handling cash at the counter. They can do more work and not worry too much about receiving money. And just to give you a number, till about 2015, only 5 billion merchants used to have some form of acceptance, either it is cards or whatever it is. Today, we are at 250 million merchants accepting digital payments. So that's a huge number. That's almost 1/4 of our adult population, more than that. And it almost covers every nook and corner. People have started now using QR codes in religious places. So I'm just saying that the penetration of acceptance mode has been another very important factor on the rise of these payments. And like I said, the underlying factor is all of them having bank accounts. These are just some numbers on customers. And like I said, we're just about 30% of the market. While all these payments are happening, it's just about 260, 300 million unique consumers which are using UPI. Active on a day is about 50 million out of 250 million merchants. And, so these are numbers which have contributed to the growth. I will not spend too much time here. While this is very important for you to understand what NPCI does, I've spoken about a number of partners. We now have a vision which is global. In fact, and our mission is to make sure that everybody has something in their hand to make a digital payment if they wish to. We are a non-for-profit. I've spoken about all this. This is our, I would say, journey starting from 2010 in the bottom right corner, going all the way to what we are on UPI today. And just to let you know that up till now, UPI was only capable of linking your bank accounts to make your payments. Starting September last year, you can now link your credit cards on UPI. You can link your prepaid cards on UPI, which essentially means UPI becomes your banking channel or a digital banking channel or whatever you want to call it. And you can choose the account type that you want to link. So if you have 5 savings account, you have 2 credit cards, you have 3 prepaid cards, you can link all of them on UPI. And when you make a payment, you can choose which account you would like to make a payment from. So I think that's the important change that has happened in the last couple of years. Very important for all of you because that's the in thing now. A lot of fintech companies in the market are looking forward to drive more and more credit using RuPay on UPI. So I think that's an important trend that you should study and think about. Like I said, have you solved the problem yet? I think no, because 30% penetration on payments, still just about 300, 400 million active consumers. There's a huge market to cover. And that's what the vision document at RBI talks about, that going forward in the next 3 to 5 years, we want to make sure that digital payments are everyone, everywhere, and every time. So affordability, identity, literacy, inclusion, and connectivity. There are times where all these payments require some form of internet connectivity because these are online transactions. They have to be switched back and then they return back. How can we solve the problem of offline scenario? How can we solve the problem of people who cannot read and write, or they can read and write only numbers, they can't read and write text? Of course, they don't understand English. So there is a language problem. There is a literacy problem. There is a culture problem. Almost 80% of our users are using are male users. So practically, women are left out of this revolution in some sense. So I think this has become a bit of a problem that we have not. We have just not sort of tried to solve it at a structural level. So these are some of the problem statements which will help us grow that market. That pie that I spoke about. So some cues out of that, payment vision, in terms of the spread and the breadth, where the internet connectivity is not there. So we look at the colored charts. You can still see the center part of India. You can see the slight north, east, a little bit of south, west, where internet connectivity is still very, in a very nascent stage. Look at Rajasthan, northeast. So these are, if you just take away the south and the region around NCR, most part of country is still very struggling with reliable network connectivity. I spoke about literacy level. We have still about 74% literacy, and that too is at a very basic level. Support for languages and voice is something that is very important. In fact, people are not very comfortable with typing, so we're also looking at conversational payments where you can just pick up your phone and call out what you want to do. I spoke about women and their inclusion in our digital payments journey. This is a clear chart. This is linking internet connectivity, everything together. And if you look at UPI payments per month, and where are they happening? You look at this south and western region. This is where most of the payments happening. Or you look at Delhi and NCR, which is Haryana and western UP. That's 7 and 9. But if you look at most part of the country, especially northeast and east, it's a very poor state. There's just about one transaction happening. In those states. So this is average number of UPI transactions per person per month. Of course, they have a high population base, so that average goes down. But Northeast is not like that. So you can imagine where the problem statements are. I don't want to talk much about it, but these are some cool stuff. I thought it's important to get you excited of things that are going to come in future. Feature phone, we are looking at solving feature phone and how to get feature phone into digital payments. People don't recognize their UPI IDs, so how we can make them numerics. We've already launched that service. Voice-based, I spoke about, or conversational payments. We are also looking at making these payments automatic. So for your bill payments, for your recharges, for many other things, rather than having to do this every single time, every single month. Can you do this regularly by yourself? you say set up the mandate and then just deducts from your account or credit card or whatever it is. Many times bank systems are not available for making these payments, and a lot of them, when there are high traffic time zones like 31st Jan, 31st December, or the festival seasons, or people doing crazy amount. So evening time. So for those, we are also saying that we can do an on-device wallet for you, where the money gets deducted from the wallet, and you don't have to go to the bank account for authorizing that payment. Gift cards, we are seeing that your gift cards can now come on UPI, and then you can, which we call as e-rupee. I spoke about credit card now being discovered on UPI. So if you have a RuPay credit card, we can actually link it on your UPI handle. And of course, the frauds and related issues where there's a lot of social engineering. You end up giving access to your phone, you end up giving your PIN, OTP, everything to the consumer, and not realizing that you don't need to enter your PIN to receive payment. You only need to enter your PIN when you have to make a payment. And to receive payment, you don't need to. So I think these are very simple messages that need to go, especially because of the literacy level that I spoke about, language levels and understanding levels. This is also a very important area of focus going forward. We spoke about just the 300 million users and how much more that can come in. Also, the credit card penetration in this country is pathetically low. We're just about 40 million active consumers in the market, and the strength of the country. Most of the people do not have credit cards. So now we believe linkage of RuPay credit card and UPI will bridge this gap. A lot of small value credit cards will be now available in the market, which people can link on UPay and can start using. So just the UPI pie chart that we call it, where apps on the left side, various features on the right side, whether it's e-rupee, QR, online payments, IPO, these are on the right, and then initiatives on hygiene, which will all help us to grow this pie. Some other initiatives, apart from digital payments, we believe is going to be important. The account aggregation. I will not go into detail. These are independent topics in itself. Account aggregation, open credit enabled network, OCEN, the technical or digitization of insurance industry, which is now brought back the insurance industry into main zone, and ONDC, which is currently being piloted, in Bangalore and some other cities. So while all these opportunities exist, I think the mainstream of digital payments have been fintechs. There is an ecosystem, more than 2,000 fintechs startups, and it is growing every year. Fintech was the only industry that received highest amount of, I would say, venture capitalist money in the last 3 years continuously, and it continues to get more VC money, funded into it, and understandably slow. Understandably, because if you look, like I spoke about the penetration levels, 30% on payments, just about 10% on credit. These two combined are huge growth areas, for the industry and the globe in general. And that is where the interest is, where they're actively looking to invest in organizations that want to invest in payments or have a business linked to payments and business linked to credit. Well, just a future state, we believe that with now payment apps doing most of the job for you, the combination of the payment apps along with bank will not just do onboarding distribution, but also do products and services offering. And at some point in time, will also help you get into credit space. So that's some things we believe will be trends going forward. These are just projects as of now. Today, these are people making payments. Tomorrow, they could be devices making those payments. Your vehicle could make that payment. Your watch could make that payment. Your IoT devices can make that payment. with the wallet coming on, a digital wallet coming on your device, residing on your device, it almost like digital currency sitting on your phone. And that can get exchanged peer to peer. You could program your money saying that whatever money you have, this portion is always for bill payments, this portion is always for insurance, this payment is always for utility payments and groceries. And nobody will touch, no transaction will touch that money. It will only be used if you use it in those areas. And I think we spoke about IoT in the markets, and so I think this is all I wanted to share. I think I'm cognizant of time, which is why I'm stopping, here. Happy to take some questions. As I maybe just have about half an hour.
Hello, good morning, sir.
Yeah.
Karan this side. Sir, we have curated a list of questions from the students as well as startups.
Okay.
So, sir, my question to you is that UPI payments have seen a mass scale adoption both within and outside the country, with companies like Google applauding the milestones achieved by the government. So, how are you planning on continuing this progress and ensuring that you keep growing in such a dynamic business environment?
Yeah, I mean, sometimes growth is also a challenge. People, organizations complain that there is no growth, there is no opportunity, and they look at new areas. For us, the challenge is growth. We are an organization where, we set up a business case for the start of the year, and we end up growing above that business case, and get reprimanded for planning too less. So I think as long as you have the voice of the customer well understood, our engagement with the ecosystem is very, very large. Like I said, we have 1,000 banks that we are working with, 1,000 plus fintechs and such service providers in the market, and millions of merchants that we work, who are a part of our ecosystem. So there is a lot of feedback. There's a lot of feed forward, I would rather say, which helps us look at our consumer problems, problems that our country has. So like I said, under penetration because of internet, under penetration because of literacy, under penetration because of the culture, where it is still very predominantly male driven. I think are problems that we're looking to solve. So while we'll try to solve that domestically, internationally, it's an open ground. We've just managed to get something started in Singapore and Middle East, where now you can send money using UPI between account holders in Singapore and Middle East, both. And you can also make payments to some merchant in Middle East and Singapore, where you see a QR, you can use your UPI app and make that payment. So I think that's an open ground. It's only about how much can we deliver.
That's amazing. So, my next question to you is: traditional players like Visa and Mastercard, they used to levy heavy transaction fees on the vendors for transactions. A major driver of UPI's growth was that it used to levy a negligible fee on their partners, which is set to change from 1st April 2023. So, do you think that this will impact the growth of the unified payments interface?
I'm not 100% sure, Karan, if that is set to change 1st April 23. 1st April is already gone, by the way. Nothing has changed. I think this, pricing is a complicated topic. Many times it is misunderstood. You cannot, first, I spoke about volumes of servers and data centers. Nothing can operate without something funding those transactions, correct? While these are digital payment transactions, to be able to set up some infra, switch the transaction, get a response back, everybody requires some servers, there is internet connectivity being used, all of that. All this has a cost. Now, it's a fractional cost, but it has a cost. So every network has a certain cost of operation. I cannot comment on other entities in the market. NPCI works on cost plus basis, and we just cover our cost. And that is the reason why we are non-for-profit. now, even though, and those costs could run into just paise, 4 paisa, 5 paisa, at max 10 paisa in some cases. Um, there is a certain commercial model that is, operating in the market. Typically, when you make payments using debit cards, merchants don't have to pay anything. But if you pay using credit cards, you end up paying some 1.5 to 2% as charges. Now that will make some that is required, because as a merchant today, imagine you get a consumer who doesn't have money, but you have enticed him to buy something. And like I said, he doesn't have money. What do you do? As a merchant, you'll say, "Okay, you can give me next month." That's credit, right? And that's a cost to the merchant, isn't it? The same way, if merchant is not able to do credit or give credit, consumer wants to buy, there is somebody else willing to give that credit. And that somebody else who gives that credit obviously will charge some transaction fee for for providing that credit to that customer, so that that merchant gets the business. So nothing is changing. Let me just nothing has changed from 1st April. I think that's a misconception. It is just that when you start linking these various account types, remember I spoke about various account types that you can now link on UPI. So as long as it was debit card or savings account getting linked, there is no charge to the merchant, and it continues to be no charge. But when you start linking credit card and prepaid card, there are small little charges that merchants will have to pay, because these are credit related transactions. That's not from 1st April. That's been now launched in September last year, and will continue to grow. However, they will never become bulk of transaction. Bulk of transaction will always remain savings account.
Okay, sir. So, my last question for today will be: how are digital payment platforms in India leveraging technologies such as AI and blockchain to enhance security and improve user experience?
Well, I think there is a inherent bias in your question. We believe that blockchain and AI are more secure and more consumer friendly. We don't necessarily believe that. I would say that these are technologies being toiled by international market because they don't have a UPI-like system. You need this when you have nothing. Maybe you can use that as a jump start. But today, so let's look at this. What advantage does blockchain give you? The advantage that is decentralized. The money is sitting with you. You can use it anytime you want. And but the disadvantage is only people who are on the chain can connect to each other. Right? Now compare this to UPI. You can make a payment any time in the day, any second of the day, and immediate. And the person you are making, the money becomes immediately available. And that's all recorded in your statement and their statement. So really, it's about when you're preparing for an exam and you've not studied through the semester, you'll pick up a sample paper and try to cover it up, or you study through the semester and you've solved for it. So UPI is studying through the semester and solving for it. Yeah.
So, do you have time for one more question?
I do, but if you can give me a quick second, just one quick second, okay? I'll just
Yeah, sure, sir.
something
No
out.
issues.
Yep.
Yes, sir.
Go ahead.
Sir, what are the opportunities for fintech startups in India to innovate in the digital payment space, and what challenges do they face in scaling up their businesses?
A very good question, Karan. Thank you so much for asking it. Um, if you go back to the presentation I just shared with you and some of the one to look at, and if you talk about fintechs, actually there are three opportunities. One, the greater than 250 million pie, which is 750 million, is all open, and that's a pie that you have to really build for. You have to make your interfaces really um, friendly, customized, conversational, less text, more voice, all of that, and automatic, which means that you don't have to do it every time. It intelligence. That's where AI comes. It intelligently recognizes you that you're going to ask for something. Let me set it up for you, and you don't have to do it every time. I'll make sure your bill is fetched and paid. All of those things. So that's one part of it. The second part of it is credit. Like I said, there's just about 40 million active credit card users in the country. Still a lot of credit in this country is given through middlemen or through NBFCs or many other mechanisms, and they have their own ways and means of giving that credit, and it's not always nice. They run at 24%, 26%, whatever it is. Huge space to drive credit. We've taken an objective in, if through our digital payment ecosystem, can we underwrite every Indian? And I think that's an opportunity for fintech space. Can they build systems, interfaces that can evaluate, underwrite, and issue a digital credit card on the go, right? And link it to your UPI handle. That's an opportunity. That's a huge opportunity. Third is on the infra side. As you build these use cases, this platform, this technology, and everything else, the banks, the service providers, the IBMs of the fintechs, okay, are very limited, and you need people who can work at, who can develop, build switching systems at scale, which will connect to us eventually, but they have to also work at the front end, right? And the banks. So we call them as service providers or technology service providers in our industry. And those are the real fintechs. Those are the guys who work behind the door, right? They are not consumer apps. They are not merchant aggregators, but they work behind the door. They provide the huge setup that drives a consumer app or that drives a merchant app. And those are very, I would say, small in number in this country. And that's a huge space. In fact, most of the VCs that have reached out, they do take a lot of references from us, from me. And most of these queries over the last 6 months are coming where they're looking to invest only in an infrastructure company, not an app. So these are three opportunities.
Okay, thank you so much, sir. Thank you so much for answering all our questions and for
No
the valuable
problem.
insights.
No
Sir,
problem.
now I hand over the mic to Moksha. She'll conclude with the closing speech.
Thank you, Karan. Am I audible?
Yes,
Moksha, you are
audible.
audible. Go ahead.
So after such an enriching masterclass, it is an absolute honor and my pleasant duty to propose the vote of thanks on behalf of the Entrepreneurship Development Cell of St. Xavier's College, Kolkata. With immense appreciation and gratitude, I thank Mr. Nalin Bansal for being present with us today and taking out time from his busy schedule to enlighten us with such practical and valuable inputs. We are sure that the learnings from this discussion will act as a guiding light and hold our audience in good stead for the future. A special mention to our respected principal, Reverend Dr. Dominic Savio SJ, and Vice Principals Reverend Dr. Joseph Kulindai SJ, Reverend Dr. Peter Arokiam SJ, and Professor Bertram De Silva for encouraging us to pursue greatness and live up to our great Xaverian reputation. I would further like to thank our faculty advisor, Dr. Arup Kumar Mitra, for his leading supervision and inspiration at every juncture. We sincerely acknowledge our audience for being patient and interactive and putting forth such compelling questions. Last but not the least, I would extend a deep sense of gratitude and appreciation for all the members of the Entrepreneurship Development Cell for their timely support and implementation. We owe the success of this session to you. Once again, thank you all for tuning in with EDC. Have a pleasant day. Thank you.
Thank you.
Thank you so much, sir.